Good morning, everybody. How's everyone doing today? All right, we're a couple minutes away from the markets opening. Hope everyone had a nice weekend. All right, our 9 a.m. crude oil report started off with this losing trade, probably 18 ticks with a little adjustment there, but then a nice 31 tick winner. Target one actually 20 tick winner, so two trades should have done the trick, but if you kept going, there was then another loser and then another winner. So hopefully that worked out for you guys. Pound Ozzy getting into its first trade. Short at 84.37. That stop is at 84.57. You can see the targets there. First target is 13 pips, so that one counts. Keep an eye on that. Yes, Roger, doing well. Hope you guys are too. Crazy times. Just so much sadness in the world right now and anger, and just I hope everyone's staying out of harm's way. Little bit of good news. My book hit the press. Actually, it didn't hit the press. It hit the shelves today. Today is the day my publisher decided to release my book. That's kind of exciting. Never had that happen before. First time experience for me. I mean, you guys are all advanced in here, so I'm guessing the book is going to be very elementary to all of you. This is really meant as a beginner's guide. But there's some pretty cool stuff in there that I think would even help an experienced trader. Yeah, sure, I'll gladly sign it. It's just a matter of how. I'm not sure if they've got me scheduled for any like physical appearances anywhere. They may have done that if it wasn't for this COVID crap. Oh, that's cool, Mac. Thanks. I appreciate the feedback there. It's a little nerve-wracking. I don't know what to expect, how people are going to receive it. Hopefully it helps somebody. That's all I care about. The publisher put up a pretty nice launch page. I don't know if you guys had a chance to see it. What I like about it is that they've got this app that flashes when somebody buys the book. So it's this verified proof purchase. Keith from La Puente, California, just bought it a minute ago, for example. That's kind of neat. I like that. I'm watching it as people are buying the book live 8 minutes ago. See, it pops up, shows when someone buys it. 16 minutes ago, Lowell from Lawrenceville, Georgia. That's kind of cool. The power of the internet never fails to amaze me. All right. Markets have already opened. Got to pay attention here, and we've already got some winners happening. A lot of action in the YM. I mean, the market opened right around on this bar here, and then bing, bang, boom. Target 1 winner, target 2 winner on the YM just happened. It's nice to see. Spotlight just keeps doing its thing. Pound Ozzy working its way lower. Let's see if it could push down and win. I might just close the 5 tick. I'm not sure this is a useful chart these days, but I guess we can take a look and see how it did. 9 a.m. start, right? I was a little bit in front. That's too bad. That was a nice winner, but half a minute too soon. So then you got caught up into these couple losing trades going long, and then a nice short, and then another small trade, which unfortunately didn't count because it was too small. Yeah, so the 5 tick, you know, it performs okay, I guess, but the trades are usually too small, although there's a nice 14 tick winner. But I don't know. To me, it's maybe outlived its usefulness with this way markets are these days. I think the 8 tick, you're better off. So if you guys were on the Catapult YM boot camp, just in case you haven't noticed, the recordings have been posted to the site. One of our long-term members, Rafat, provided some NinjaTrader workspaces. So I put those up there as well. And there's a few new NQ trade plans which are coming. I haven't posted them yet. I still have a little work to do on them. They're almost ready. And I'll put those NQ trade plans up there as well. They're pretty good, actually. I think you'll like them if you're in the NQ module. There's a nice bonus that some of you got. Look at the pound Aussie working its way lower. Just needs to go a tiny bit lower. Let's see if it can get there. If it could touch its moving average, at least that'll get to its power of quitting goal. Unleaded gas. Again, just simple 9 a.m. That one looked like it might have went too quickly. Not sure if anyone could have grabbed that. 4 seconds after the hour, and then 6 seconds later, it's already down to here. And then the next one, though, you had plenty of time on that. Usually when you see multiple bars hovering around the entry, that's totally tradable. And luckily, if you missed the first one, which most people probably would have, the second one did well. The third one did well. Spotlight did well. All is well for unleaded traders. So in case anybody didn't hear or maybe interested in the Catapult Advanced membership, we've got a boot camp coming up on the 11th, which I may have to change the date because my guy from TradeStation, who is going to be doing a presentation on some of the advanced features of automation and how to use it for actually trading live and all the correct settings, and like a real important session, I'm looking forward to it, won't be able to make it on the 11th. Just found that out. So I'm probably going to have to work around that date and reschedule it. I'll be figuring that out hopefully later today, and then I'll send something out, but that's going to be a good one. And the automation has just been really good too with Catapult. There's so much you can do. It's just such a simple setup, and learning how to use it, of course, is important. But I was going to show you some of these NQ plans I'm working on. The NQ is an exciting market. I've been running these tests. This is going all the way back to March. And of course, it's using continuous charts, and there are a few things that you have to be aware of, and you probably got to figure a margin of error to some extent because the rollovers occur at not the right times and a few other things you can't do with automation, but gives you the big picture. And what I like about it is there's a lot of room for a little bit of error when you have a $200 average net profit of all wins and losses. When you see numbers like that, it's like, it should get you excited, because all you need is $50 to build a $250,000 account in 2 years. So, per contract, per trade with good money management. So when you could do $200, and of course these are bigger trades because of COVID, so you might want to divide it by 10 and add a couple more micros, make a trade instead of, one full-size mini, few micros to get that average profit up there to that $50 plus level, but with micros to minimize the risk at $2 a point instead of $20 a point. But that's dating all the way back to March. I do want to see it pop up and make a new high, because whenever you have a new plan, you want to watch it continue to perform for a while. You can see the COVID volatility in the equity curve here. Rather remarkable, just considering it's so historic and unprecedented. But there's several trade plans looking really good. Different ways, different times, different start, different stop, different filters. There's a lot you can do. It's pretty versatile for one simple setup. Anthony, I'm not putting slippage in, but you want to look for that big average net profit so that you can absorb that. You're going to have trade costs, but like that's the reason why you look at that average net profit, because then you could just think through what other trade costs need to be covered with that average price, that average per trade. That's why that's such an important number. But you could also be trading with stop limit orders to eliminate a lot of the slippage. Of course, nothing's perfect with trading ever, but you mitigate as best you can, right? But the average net profit is one of the key numbers, and if you combine that with a good, strong winning percentage, then, you got something that gives you a chance to succeed with. So just to give you a sense of some of the things I like to look for, here's a plan I put forth, I don't know, a month or two, however long it was, already lost track of time, but this is the ES of one of the 4-minute plans with that 86% win rate and a pretty hefty average net profit at $147 with pretty well balanced up and down. But the thing that I like about this is one of those that you have to, again, you want to see it perform, but it's passing the test so far because you had some crazy volatility in here, but look what it's done since. New equity high just the other day. And so that's what you want to see. Now I want to see this continue to go up, obviously, but that's a big confidence boost, because it's certainly, when you see it spike way up like so, and then you got some of this happening, and again, you got a lot of COVID volatility in here, but then to see it recover and forge forward, if it, that's what a winning trade plan does. You're going to give some back. There's going to be the 1 and 2 steps backwards. You just got to hang in there with the right position sizing so that you can get the 2 and 3 and 4 steps forwards when that happens. Or in this case, 100 steps forward. But of course, again, this one goes all the way back to September. It's still a lot. I mean, that's a long way to look back, right? 7 months. I mean, that was a much different world last September. Imagine last September and then try to think, what's going to happen in the next 7 months? Oh, there's going to be a pandemic that brings the world to its knees. Who would have thunk that, huh? And then, you know, there's a few variations. This one here also, 86% win rate. This is even better than the other one as far as your average. Talk about absorbing some slippage. But again, breaking out to new highs. You know, you got to survive through the ups and downs that look and feel dreadful when it's happening. But when you become a trader, instead of just somebody trying to trade, you get your position sizing right, and you just have to remove yourself from the equation as far as your emotional attachment to the outcome. And you can't really live through this until you live through it. In other words, you want to, like, I'm living through it by watching it. I'm not trading this plan yet. My own confidence is still a little suspect because so much, I mean, this is all COVID, this explosive growth, as well as this up and down volatility. And so because it's so new, I'm also wanting to continue to see it perform before I would commit my real money to it. But, you know, a winning trade plan doesn't grow on trees. It's not easy to come by. It's a treasure that needs to be treasured. You have a winning trade plan, you have to treasure it because it produces treasure. And anything that produces treasure does not come easy. It's hard. It takes a lot of work and effort. And no matter what, you're on the right edge of the chart with no guarantees of anything. That's what trading is. But when you look at something like this, dating all the way back 7 months or more, and it's only lost 5 trades in a row, but it's won 27 in a row, that's the kind of information that builds your belief. Look at all these winning streaks. And it only lost 5 trades in a row once. I mean, even a 90% winner could lose 10 in a row. This is an 86% winner. So it lost 5 in a row once, and it lost 3 in a row twice in the last 321 trades. I don't know about you, but to me, that's the kind of number I need to see to build my confidence. And then to witness it survive and then break out to new highs, that's a step in the right direction for sure. This is the ES, of course. Show you guys one other, because this one also has some pretty stupendous numbers. Look at that average net profit, $273. It's only lost 2 trades in a row. And this is also dating back to September. This one's probably using some filters. I'd have to look at the inputs. I forgot what it is, but it's another variation and making new equity highs after what appeared to be, you know, a trade plan that looked too good to be true, because when you see numbers like that, you have to be suspect. And then it worked its way all the way back up. I mean, if this is when you started trading it right here in early April, and here you are a month later, your equity curve would start here and you'd just see it go like this. If you started here, you'd have yourself a little bit of a drawdown and then a total recovery. So again, this is something I want to see it now go up. We'll revisit this and see how it looks in the future. But when you look at the trade analysis, and again, you see these wicked win rates, and look at the losing streak. It's only lost 2 in a row, 5 times. Yeah, how many contracts? I don't know. They're all different. This one is 4. And that does affect the win rate because of the way TradeStation counts contracts. This uses the fixed contract too, which is kind of unique to this plan. So you got targets 2 and 3, a fixed target, and then a trailer. And power of quitting 5, and that's also unique. Basically, it's 5, meaning this is 5 trades. Power of quitting 5 means if you win in the first trade, it'll stop, but it'll take up to 5 trades to get positive. But with a 4-minute chart that's only going from 11:30 to 11:10, I would say 5 trades probably doesn't happen very often. And actually, it goes from 9:45 to 11:10. So barely, not even an hour and a half, an hour and 25 minutes. So the odds of getting 5 trades, I think, are pretty slim. Maybe it happened hardly. I don't know. You'd have to look back at the trade history. So, it's an hour and 25 minutes of looking for trades. You might have to stay in a trade longer if it kicks in right near the stop time. But it's got a 48-tick fixed target. So at 12 points, it takes profit on one of the contracts. I mean, how will that work when markets get back to normal? I don't know. Guess we'll find out. It's got a pretty big profit factor. Definitely better on the short side. Wow. Long side, not bad, but the short side, 3.08 profit factor. It's an interesting trade plan. We'll see if it holds up. Again, there's never a guarantee, and winning trade plans are not easy to come by. They exist. That's why it's good to have a lot of irons in the fire, and those irons are like research and development. You let them play out and season themselves, get seasoned, mature, see what happens, see how they hold up through different market conditions, and you want to see that equity curve continuing to work its way up and to recover from drawdown. And then you study the drawdown, and it helps you figure out really what your risk profile should be. Maybe 2% is too much on some of those. Maybe not. I don't know. Everyone's different, but you got to think about it at least. A lot more people joining us. I forgot to change the password back, so I apologize to you guys. I did it, 15 minutes before opening the room. Kelly Bundy syndrome kicking in after the boot camp the other day. It was a tiring day, but energizing too. It was pretty exciting, I thought. Got a lot of good feedback from those that were there. Andrew says, I get lost in the technicals and how to change items in the calculator to work better. You don't want to change too much, Andrew, until you've kind of given it a good test. I mean, if you're going to change something, you should do it on a separate chart and then do your fast testing at least. And if you could use automation to get some overview, some big picture information, all the better, because you can run an optimization report and kind of see, well, look at all the different variables that this one input gives all these different results, and you don't necessarily want to pick the one with the biggest net profit. What you really want to look for is profit factor and average net profit per trade, and then a nice winning percentage, and those 3 things combined usually give you good information, but also well-balanced long and short. Like, I don't want something that maybe has great results, but it's skewed too heavily to one side of the trade, either longs way outperforming shorts or vice versa. I really want to choose something that's well-balanced, that up or down still gives you decent, really good results. So it may not be the input that has the highest net profit, and oftentimes it isn't. And when you're looking at a lot of data, you got to be careful. Whether you're looking at a lot of data or a little bit of data, what you don't want to do is curve fit your results. That will always look great, and then it'll break down starting tomorrow as markets change and the curve that you fit also changes. So, you know, you want to give it wiggle room. You want to see some fuzziness on the edges and the fringes so that it can survive the random distribution of randomness. I don't know if anyone's ever said that before. It's probably a stupid phrase, but you understand the point. There's no control over what's going to happen next, and the market's always changing. So you want to have a trade plan that can accommodate and adjust itself. You don't want it to be so curve fit that it just fit everything that happened in the past perfectly, because going forward will not be what happened in the past. So like I changed my offset ticks and now I don't know what to change for my targets. Yeah, so why did you change your offset ticks? I mean, if you're going to change, do you have a reason? Because are you using automation, or are you just doing it by eye with the calculator? Because automation, you could test certain things and you could have variations, and you can keep your standard one, and then you could make little changes here and there carefully one by one. And if you're going to do it manually, yeah, you need to have a reason for it. And then you could quickly do a fast test and see if you've solved your reason. So you might push your entry out a tick or two further just to eliminate trades that barely tick in and then fail. But you could also look and see, instead of changing and pushing your entry out, maybe you just need to make an adjustment here and there on a specific trade. Like look to your left and there's a little spike, maybe you don't trade into spikes, or maybe you push it a tick or two beyond a major moving average, that sort of thing. Yeah, so making huge differences is a good sign, but it also gives you enough information to go through and look at past, do a fast test. I mean, the fast test is a great invention. Chicken scratch counting, I can't take credit for it. You can learn so much just by quickly counting. Did it help me? Yes. Did it help me? No. Yes, no. There you go. Aw, that's so romantic. Andrew was bored to death because his wife was out of town. We should all have a marriage like Andrew. I'm happy for you, man. I feel the same way. That's a real man right there. Loves his wife. All right, where are we at here? Trying to think what I can do to make this trade room more interesting. I'm wondering if anybody has tried using Catapult with momentum bars, because that's an area of research and development that's on my list, and I just can't seem to get to it. I'm hoping that you guys realize that momentum bars are going to be fantastic charts of Catapult. Here's one I'm randomly looking at. I'm just going to pull it up. I think I am. Nope, that wasn't it. second. Yeah, so, I mean, Catapult's easy. It's one trade, right? So 8:30. Here's 8:33. It looked like that was probably a trade. Yeah, you could have executed that one. 22 ticks at target 1. And then a long trade here. That one looks like you had time to execute it as well. It's hard to say when you're not looking at it, but the momentum bars could be really good with Catapult. I mean, they could be really good. I just haven't spent time with them. The 5-minute chart was so much easier, right? You can get more data for one. This is a 24 tick, though. Pick a random chart. Do your sniff test. Are there enough trades in a session? Are the trades an appropriate size? Can you quit positive with, can you quit with a positive result most of the time with minimal trading? Those are the 3 questions to ask and answer, and it's not hard to do. So randomly looking at this chart, are there enough trades in a session? Well, there's 2 so far. We're only 30 minutes into the session, so I'd venture to guess yes. You'd want to look at more trades, obviously more sessions. Are they an appropriate size? 27-point risk on the first trade. I mean, I don't know. Hopefully you could afford $135 of risk if you're trading futures. 27 ticks on that one as well. So I'd say yes. Probably an appropriate size. You want to look at maybe 20 trades and get the average, but you can kind of see it's a 24-tick bar, so the trades should be relatively the same size until, a little off with key level adjustments. But yeah, I think it answers that question as well, but you'd want to, again, look at more sessions, obviously. And then you count, can you quit positive most of the time? And that's the key. So what if you don't want to start so early? You want to sleep in, you want to start later in the day? You could use the same technique. When are you starting? Can you quit positive most of the time? How many trades? Well, you find that out when you're fast testing, because you might think, oh, I'm only going to trade 1 or 2, and then you go, well, gee, that third one sure wins a lot when the 1 or 2 lose. Then you start using that one, and now you're up to 3 trades. But 3 trades to get positive, if you can do that within the first, second, or third trade, and that passes a fast test, I'm not saying this does, I'm just saying hypothetically when you're thinking it through, I mean, that's, to me, appropriate. 3 trades is still, in my book, minimal trading, especially when a lot of the times it'll be the first trade where you're quitting or the second. What about 4 trades? I mean, that's when you have to start thinking it through. Is that 4th trade still appropriate? And the question is easily answered if it wins a lot. If it gets you from negative to positive more often than it doesn't, it probably is a good idea. And then once you figure all that out and you go, okay, I got it, you fast test it, you like it, you still got to do your UTA work. If you really want to know what's happening and really decide where your exits are going to be, which targets, trail. There's different trailing techniques too. I don't have the moving average on here, but you could easily put on a 1-bar stop and get out right there. And that's even better. It gets you out sooner and it makes more money. So those are also questions. Plus that little dot appears, which you could even use as an extreme target. We didn't talk about that at all, but it's possible. I mean, why not? So you can come in here and say, okay, let's do a 1-bar stop after it gets to target 4, just for example. You could use automation too to figure it out, but you put in a 2.5x and then trail it by 1 bar, like so. So you can do the 3-bar stop, but you might just want to get in, get out, and get done, and get on your way, which is the backpack trader way, and do a 1-bar stop. And ironically, in this example, do the 1-bar stop, and this stop here, which gets you out, how much sooner? Several minutes sooner. maybe 10 minutes sooner, give or take. I forget where. Anyway, it ends up making a tick or two more than the 14 moving average stop, for example. And also then, though, that changes your fast test. But look at where it gets you out up here. I mean, is there a better place to get out? That one bar stop is a very interesting tool. And you can't see it, but you could make the little target that marks your stop bigger. So you can use your stop markers as targets, or at least you know where, oh, I see, you can't see it. You can't see it because it's at 2.5x. Let's say we started at 3x. See, there is no 3x target, right? But if you put your marker and you want to start the one bar stop at 3x, do you guys see that little dot right there? Now you have a 3x marker, or whatever you put, 6x, 8x, 10x. I mean, if the price gets all the way to 10x, maybe you just take profit. Just exit. I mean, why not? There's so much you can do. But I like the marker because when that marker shows up, it kind of tells you another target level. And you can make that bigger. The calculator is not going to know to exit at that dot like it would with the other targets. But you're the trader. You can do what you want. Let me look at your comments. I keep watching the Renko bar chart compared to the 5-minute, now filtering the Renko more to have fewer signals. Yeah, with the Renko, I mean, with the custom Renko, you got that wick, right, that goes up and down, and you do have to be careful of getting caught up into that, but then you could really catch some explosion. I love the Renko. It's smaller wins but smaller losses. Depends on the size of your chart. You could have bigger Renko charts. Will you share the Renko and momentum bar setup charts when you get them done? If I ever get them done, Andrew. I mean, my job really is to teach you how to use the tools so you can chase down your own ideas. I mean, my list keeps growing, and stuff that I wanted to get done is still on the list, and I don't know when I get stuff done these days. All this stuff keeps jumping in front. On a range chart, shouldn't every trade be the same size? Yeah, except there are key level adjustments, Dirk. So apart from the key level adjustments, they're pretty much the same size. If you turn key levels off, then I would say they should all be the same size every time. And I don't know if they're on here. No, they're not. So that's an interesting idea. If you're using a continuous chart and trying to test a lot of data in the past, you have to turn the key levels off, because the past trades the price levels will adjust to smooth the chart, and they actually never existed. But the trade patterns are identical, the price bars are identical, but the price axis, the price levels change with continuous charts. So you have to turn off key level adjustments. But when you're using the regular contract, maybe you want to turn them on, and that would cause some trade sizes to change because you might adjust around the zeros and fives and what have you. The other thing, manually, is I'm still thinking it's a good idea to put your stop a little bit higher up and beyond the close lines that are in the proximity of the trade. It's not always going to happen, but like with this green trade, even though it wasn't necessary, and this you do manually, you don't try to program this. I wouldn't want to program this because it would be too difficult and it might break other things, but I'd put my stop like right below the catapult line. So if the the slow catapult line. The slow catapult, which is the dashed, I'd want my stop probably 1 or 2 ticks below it. And I'm willing to take a little extra risk, because I just think it makes a difference. All you have to do is save a winning trade every now and then, and you'll be happy. So in this case, you have a high of 48, and without making the key level adjustment, if you have a 2-tick entry, it got you in at 250. So, you know, I'm habitually going to put that entry at 251. And since I turn key level adjustments on, that changes then the trade a little bit, because now you have 1 more tick on the entry and a few more ticks on the stop, although it doesn't show up in the calculator, just because it was manually adjusted is, you know, how I would do it. With Catapult, any intuitive advantage of momentum versus Renko? I think, Robert, they're both good. It's a matter of, first of all, can you execute? Because both charts present challenges with execution, right? Because there's no time element. And, I mean, with this, if you just look at this, now we could look at a Renko as well, and this is what they both have in common, but you see a setup coming, and you got 1, 2, 3, 4, 5, 6 bars before it triggers in. That's 6 minutes. It's not that much time, and you already know what your setup is. And one good thing about this is that even before the bar is finished forming, if you know where your low is, you know where your high is. And you could place your trade even before the bar finishes. So even on a fast-moving chart that you might go, oh, that was too fast to trade, maybe it wasn't. Maybe you were able to get your entry in before the bar even finished. So like right now, you can see the catapult line is green. But if it was below showing red, the catapult line, while this bar was forming, you'd be able to see the high as 25,400, and then your head subtract 24 ticks, right? Putting it down to 86, 76. Putting it down to 76. So you could put your entry in at 74, or even a little below if you want to adjust. Like right now, you do a different calculation. The high is at 402, so the low is going to be at 78. So maybe you put your entry in at 74 anyway. And maybe you don't trade at all. I'm just saying you could anticipate where the entry will be in advance of the bar closing. But you have to be careful, because if it comes up and makes a new high, like it just did, it went to 404 now, 406 now, you have to cancel and replace your entry. But that's one way to jump in front of the trade. Can you do that with a Renko? I don't know. I haven't tried. I don't watch Renko enough. Not a Renko expert. But like right here, you could place a trade. 406 minus 24. What's that going to be? Well, 79, obviously. But you got that little spike at 77, so maybe you're getting short at 76. I hate getting short in front of a quarter century, but it did push down to 73. Anyway, that's one of the benefits of a momentum bar, is anticipating the entry. But you have to practice it, Robert. You have to practice it. That's one of the things that's a legitimate use of a sim account, of a simulation. Because you're trying to practice your trade execution. There's only 2 reasons to use a sim account, and if you use them for any other reason, you're hurting yourself. This is my opinion, but I believe in it strongly, because you develop bad habits that hurt you. Your sim account, you have to treat it as if it's real, and you use it to practice your trade execution, so you get physically and mentally and reflex-wise really good at placing trades, all kinds. Stop and reversals, canceling stop and reversals, different quantities. You practice. Anticipating trades like we just talked about. Use your sim account for that. That's a good use. But just realize you're not doing it to win or lose. You're doing it to practice trade executions. It's not about winning. It's not about losing. It's about being able to place your trade correctly each and every time. So use a sim account for that. It's one of the 2 legit reasons. I've yet for anyone to tell me a third. Maybe there's a third reason. But the second reason is you do the same thing, but you practice your trade plan. That takes more time, but you use a sim account to prove you can execute your trade plan day in and day out. Give yourself time to do that. I don't care if it takes you 1 to 3 months. The rewards are just too important to get wrong. And you're better off taking the time to really practice running your trade plan like a business. And that's the second reason to use a sim account. Now you're developing good habits, the right habits. Can anyone think of a third reason for using a sim account that will help your trading? You have lots of reasons, but any other reason I've ever thought of won't help your trading. It'll hurt your trading. Maybe I'm missing one. I just haven't thought of it. Most people just are cavalier with their sim account. They couldn't care less, and they do dumb things, and you practice how you play. That's going to translate to your real trading, and it's going to end up hurting you. So don't use a sim account like that. Right, so you shouldn't lose money. It shouldn't hurt you when you lose money anyway, because if you have a losing, first of all, you have to define what losing money is. Yeah, I mean, that's also a problem, Anthony, because if it hurts you losing money in real life, it should hurt you equally losing money in your sim account, which is a reflection of what real life will be. So that's my whole point. You're making my point, even though I know you're being humorous. Does a losing trade lose money? What if it's that equity curve I showed you earlier? If you don't get those losing trades, you're not going to get those winners either. So I would argue the losing trade makes you money. In that context, yeah, I agree with you, Robert, but okay, so that's a really good point. But why don't you give yourself a goal to work towards? You don't stay in sim trading forever. Stay in sim trading until you earn the rites of passage, and then now you're stoic and determined, and while you're stoic and determined, you're developing good habits that you'll be able to repeat each and every day because you will have earned the rites of passage to real money once you've achieved that goal. It should be 25 mistake-free trades per your trade plan. And starting over at 1 again, any mistake you make executing your trades, I don't care the reason. And the thing is, that's going to force you because you're going to want to trade for real, especially when you're getting good results and you're executing and you're on trade 21, and you run to the bathroom and miss the trade, or you are running back to your trade desk with your coffee, your toe hits the carpet, you stumble and spill your coffee on your keyboard, short out your computer, and miss your trade. Not only do you need a new computer, but you got to start over at 1 again. Work through that in a sim account, right? Those are mistakes. Those are the things you don't want to do with live trading. That's the legitimate reason to use a sim account. Those 2 things. Learn how to execute your trades. Learn how to execute your trade plan. I don't care if it takes you 6 months. Just think about the rest of your life and how this will benefit you going forward when you get it right. It's just too darn important to get wrong. So investing a little bit of upfront effort in yourself, I mean, what better investment can you make? What's going to pay you more? That's still a question no one's ever been able to answer either. other than the results of all that hard work. That's what's going to pay you. No, the sim account won't clean up the coffee, but it'll sure teach you not to do it again. When you have real money on the table, what if that was the one trade that got you positive for the week? That's worth a new computer, just that alone, in many cases. Especially 6 months down the line when you've built your position size up, a few contracts bigger. One trade, I mean, so many people are like, they're worried about costs, you know, oh my God, it's another $400 or a new computer or a new Catapult boot camp, oh my God, I have to win one more trade to pay for it, woe is me. That's all small thinking, because if you get it right and you just win and you start growing your account, money becomes irrelevant. Yeah, I mean, being in a Catapult trade is pretty exciting. That's why it got its name the way it did, because it does feel like it's been flung from a catapult sometimes. It's a momentum trade. I mean, that's the whole point. I mean, it's pure momentum. It's price action and momentum. If you have a lot of momentum behind it, it could really zoom. Zoom was already taken, so I decided to call it Catapult. We haven't looked at any Renko with the YM, so how might we do that? Well, the ES was 6 ticks and a 3-tick offset. Why don't we start with that? It's probably too small, I guess, but who knows? Let's give it a try. We can go with custom, a 6-point brick, and a 3-point offset. Yeah, I mean, the momentum bar might need help. I mean, I don't know how well it will do. You know, you might have to optimize it. It might not, you have to find the right size momentum bar. Maybe it's a different set of catapult lines. The 2 and the 6 were great with the 5-minute chart. Doesn't mean that's the best 2 lines for a momentum bar. So you got work to do. I mean, this is kind of a messy looking chart because there's not a lot of range. But look at the size of the trades. Just because we chose a 6-point and a 3, I mean, target 4 is only 11 ticks, 11 points. To me, this is just too small. This looks messy because it's the wrong chart. And that could be the thing with what you just found out, Anthony. You just got to find the right chart and the right lines. So, I mean, let's make the chart bigger. Because this doesn't pass the sniff test, if you ask me. Look how far back you have to go to find the start of the session. So if you're doing the sniff test is great. It really makes things simple. Are there enough trades in the session? Too many. Are they an appropriate size? No. 6, where is it? Risk. 12 ticks. Maybe for a scalp, if you can somehow win a lot, you know, 12 ticks, you scalp, but I mean, that's how much you're risking. It's only 13 ticks at target 4. I don't know. To me, I don't like fast, noisy charts. So it does, for me, it doesn't pass the first 2 questions in the 3-step sniff test. That's the beauty of the sniff test. I'm looking for a duck, and instead I found, you know, one of those, a hummingbird, basically. Too fast. So, I don't know, 8 and 4. Just start inching your way up. I mean, there's some nice trades in there, but I don't know. Still think it's too fast. I mean, it's pretty fast. There's a lot. I mean, look at all those trades. We just made the bar bigger. But I mean, can you quit positive most of the time? No, there's a loser and there's a winner. So the loser was 12 and then add a few more ticks because of the adjustment around the line. So maybe 15 tick loser. It's only 10 ticks at target 2. 8 ticks at target 2 is too small. 12 tick. I mean, this looks like a loser, but it's not. It's a winner, because if you're going to adjust around the line, you adjust around the line. You do it every time. And that's why you adjust around the line. So, I mean, you're able to get quit positive with this group of trades. You see? But I mean, that all happens inside of 3 minutes. So to me, it's too fast and too small. But if you could finish in 3 minutes and win 90% of the time, maybe that's good for you. You test it. Let's make this a bigger bar. Let's jump up a bit. Let's go to like, I don't know. Let's go to 14 and 7 and see what that looks like. Oh, you did 12-6. All right, well, we went to 14-7. 12-6 could be good. Still a lot of trades. Doesn't mean it's inappropriate. It's an 18-tick risk. And remember, these are not the same as momentum bars, because the brick itself is 14 ticks. But you also have where the price traveled partially up or down that adds. Like in this case, you've got a high of 66 and a low of 52. So there's your 12 ticks. Or 14 ticks, I mean. But then on this bar, you've got 303 to 280. That's 23 ticks. So you're going to have different size trades. But maybe that went too fast. I don't know. You actually had another chance to get the entry on the next bar. So that's probably your one and done. And then a second winner, and then a third winner, and then a loser and a loser, and then a big winner. A catapult winner. With the 1 bar stop, by the way. Look at that 1 bar stop working beautifully. And then another winner. And then another winner. And then another winner. And yet, a target 1, 12 tick winner. You know, the stop moves up, break even, and then finally a loser, and another loser, and another loser. So 3 losers in a row. And it's only 45 minutes in. So is that too fast? I don't know. Yeah, with no filters too. You could put filters. You could start improving this. This is just a quick look. It does pass the first 2 sniff tests, because I think obviously there are enough trades, and I think an 18-tick risk. And if you look at a lot of these, you see 17 ticks, 19 ticks. The other thing to look at is that you want your target 2 to be 1 to 1 or better. And it is, because it has to accompany and, you know, it has to account for your breakout entry and stop. And you can push your targets. Like here's one that's not quite 1 to 1. There's probably some key level adjustments going on, and you can see that there are. Plus, you'd push that stop down to here, so your risk reward gets skewed when you buy a little insurance policy by moving your stop below the lines. That's okay. You get value from that, so don't get hung up on how that negatively impacts your risk-reward ratio, because you're still getting value. Think in terms of value. It could keep you in a winning trade. So yeah, maybe this is okay. Let's be a little bit more bold and go 20. Let's go 20-10 and see what that shows us. remember, you want to quit with a positive result most of the time, as efficiently as you can. So you keep that in mind. I mean, that last chart definitely proved you can quit positive, and it didn't take very long. Was it very efficient? I don't know. Might have been too many trades. So this one here, that's 33 ticks. Okay, so now you have to really ask if that's an appropriate risk. And only you can answer that. So you have a losing trade and then a break-even trade, assuming you're going to target 2 instead of target 1. So loser, break-even, winner. Well, 3 trades. Loser, break-even, and winner. Who wouldn't want that every single day of their life? That could cure what ails you if you can do that every single day. So, you know, my question is, are you losing money when you lose on this trade? Right, Anthony? I would say you're losing money if you don't lose this trade, because if you don't lose this trade, then you don't win this trade, if this is your plan. So it's relative. That's the whole point, and that's why it's so important that you use your sim account properly and follow the steps properly, because you want to train yourself to be a trader that makes money, not a trader that worries about if a trade wins or loses. What you want to worry about is that your trade plan wins and that you're executing it properly, and that's why you use your sim account in the proper way and not in the improper way, which will cause you to probably lose money. What if you're starting at this time? 9. Let's say you're starting at 9. Okay, the first trade loses. Second trade breaks even. The third trade we don't know yet. If it wins, well, there you go. 3 trades. Maybe it doesn't win. It's only one session. You know, the jury's still out. You got to do your homework and figure it out. Most people are undercapitalized, in my opinion, which hurts. I agree with you. I mean, here you go. Let's look at that. That's a really good point. So one of the additions to the Catapult is your position sizer, and it's based on your capital. And the default setting is $20,000, which a lot of you don't have and aren't starting with $20,000. So how much are you starting with? 10,000? Is that reasonable? 5,000? Do you want to risk 2%? What if you're starting with 5,000? Can you afford to risk a little more than 2% just because, I don't know? I mean, you're not going to be able to take any trades in the YM. It's going to say 0 when it says how many contracts you can trade. Look, 0. You're undercapitalized. Pretty good information. So change the symbol. MYM 20. Whoops, what am I saying? MYM 20. MYMM 20. Lots of M's, M&M's. So now you've got 1/10 the size, and Anthony makes a critically important point. Trading uncapitalized is a recipe for just being a losing trader, period. So now with a $5,000 account, you're able to trade 5 micros on that trade. You're able to trade 7 micros on this trade, 8 micros on that trade, 5 micros on that trade. So even though you only have $5,000, if you're trading with 2%, you can trade this plan. If it's a plan, I mean, this is just a chart at this point, but just, you know, hypothetically, we'll call it a plan. And then again, you could drop to a faster chart. Try 18 and 9 if 20 and 10 is not working, or whatever. The point is that you got to start with something. But you're looking at big picture information that's provided really quickly. Imagine if you didn't have this in the calculator. We take for granted our entries, our targets, our stop, our trade in the data window, and now the size of our position even, because we're so used to trading like this. But think back before we had that. Think back before we could just see a trade that shows up when the setup happens. Whether it's Spotlight or any other. I mean, we really, we're spoiled now. We take for granted all this priceless information, and yet so many do not use it to their advantage. That doesn't mean you just start taking random trades because it prints on the chart. These are tools to help you achieve your financial goals in life. Think about the bigger picture. Yeah, Robert, I'm not saying that you guys don't appreciate it. I don't think that for a second. I mean, you guys are here every day, and I know you appreciate it. But it's easy to take it for granted because there it is. We have it now. We're human beings. We have short memories. It's like I always tell people, once you trade with this, how could you possibly go back to some other way? How could you trade any other way? I can't even imagine it. I wouldn't want to even imagine it. It would be like, oh no. It's like, let's live in caves instead of houses. Let's send smoke signals instead of email. I don't know about you, but I mean, we have such an advantage with this stuff, but you have to use it. A tool is only as good as the person using the tool. You can have this great set of tools, and it doesn't mean you're going to build a great house. Anyone see that episode, that series on Netflix called Win the Wilderness? Anyone see that? Talk about a metaphor to trading. It's quite an amazing series. You've got this guy who 35 plus years ago went into the most remote part of Alaska imaginable, where every step you take you can get eaten by a bear or worse. I don't know what's worse than that, but every which way imaginable can kill you. And he built a 3-story home with his hands, cutting trees, stripping the trees, building the home. I mean, it's amazing, out in the middle of freaking nowhere. The only way you can get there is trekking through the bush or flying. He stripped down some land and trees and made a little runway for airplanes that come and go. Imagine that. So now, he also met a wife who was amazing, and the two of them built this incredible life. And that you see their home and how they built the whole thing by hand. It gives you goosebumps. And now they're old, and they want to pass on their legacy to a couple who will relish and want to live that lifestyle. And so you got 6 couples from Britain, from England. Why there? I don't know. And they're all competing to prove they're worthy of that lifestyle, and he wants to give them their home and pass it on to the right couple who will grow it and continue to live that dream. It's a pretty interesting series to see these couples and what they have to go through and who wins, and you get to see all the hard work that these guys do. I wouldn't want it. It'd be cool to, spend a weekend there. It's amazingly beautiful. But that's just too hard. The reason I bring it up is because they took what they had and they built something with the tools that they had and what they didn't have. Now, you put 2 more people there instead of them, and maybe they do end up getting eaten by a bear. Maybe they build something that the big bad wolf can blow down, huff and puff and blow down. It's what you can do with the tools that matter. It's not the tools you have. It's what you do with them. Yeah, living totally off grid, John, but it's beyond living off grid, because they were in the bush and said, let's put a house here. We'll call it Our Mountain. And then get to work. There wasn't a grid in those days anyway. Well, there's a telephone. They were married for living up there for 30 plus years. But I mean, the bears want to eat you. They're not Yosemite bears that just want your garbage. They want you. They want to eat you. It's remarkable. Anyway, the bigger point I'm trying to make is you got these amazing tools. It doesn't guarantee you're going to make any money with them, and you can hurt yourself. You can get eaten by the trading bear or skewered by the trading bull, or you can use the tools and do the eating yourself and do the skewering yourself. You be the one doing the skewering, not the one getting skewered, right? But you have to use the tools in the best way, and that there's a learning curve. So it's like that's the whole point of this trade room anyway, is, you know, you got to learn to use these tools, and that's why I'm here. And so I want to teach you how to discover this on your own. I can't chase down every chart, obviously. But it's what you do with it, and that's why I'm stressing the use of a sim account. The sim account has two uses, and if you're using it for any other reason, you're hurting yourself. I've yet anyone to tell me a third useful reason. Maybe someone will think of one. I keep this open. I should close some other crap that's open. Let's see. Too much stuff. Wow, look at all those charts. No wonder TradeStation crashes all the time. I blame it on TradeStation. I blame it on myself. Oh, there's so much stuff. Get rid of that. AMT, before I close it. Someone said this was a good chart to trade. This looks like it's with counterpunch. Looks pretty good too. There's a long. Oh, that's a monthly chart. No wonder. All right. Bye-bye. USO. Just standard settings, I think, but nice long on USO. USO, what did they do to their... They must have done something to their price. Did they do a reverse split? What did USO do to push that price so high? There must have been some finagling with the prices. They did something, because it never was at these levels. Probably a reverse split. Does anyone know? Because this used to be like really low. All right, anyway. Say goodbye to that one. QMK. This has got to be the... Oh, yeah. Okay, so who would want to trade that? That's funny. That's an old mini, micro, or whatever crude oil chart. Definitely don't need that. What else? Gold. Last time I looked at gold, it was the J contract, so it's been a while. What contract are we in gold right now? At GC. That's one way to use, what? That's one way to use the continuous chart, is you could pull it up and then it will tell you that we're on August. And if you forget the symbol of August, it's Q. So now I can just go GCQ. Thank you, Kevin. Yeah, oil has gone up, but USO wasn't up in the 90s. I mean, I think they must have done something to the shares. And I'm guessing it was a reverse split. So if you had 100 shares at one price, now you have 10 shares at a higher price. If they did a reverse split 10 to 1, for example. That sucks when that happens. I don't know. Do we need this chart? Probably not. It's just taking up bandwidth. Goodbye. We didn't need that USO chart either. Let's get rid of that. That's probably another one, actually. YMH. Well, if there's an H chart, it's probably because we don't need it. Let me get rid of it. DAX? An H chart on the DAX? Anyone in here trading the DAX? Didn't think so. Goodbye. Just got too much stuff open. It's ridiculous. So natural gas, that's a G contract. Natural gas is a nice thing to look at, but we never do. The G contract, that's like months ago. Goodbye. What else? Another DAX. That's at least a June DAX. No, it's not. It's actually a December 19. Too old. Goodbye. Let me save just in case this crashes and they all come back. Oops. All right. NQH. I don't know. When was the last time we looked at the NQ even with Spotlight? March contract? I don't know. Get rid of it. QMH. Again. Bye. Man. Anyway, guys, not sure what else to do with you. I'm just kind of killing time here. If you have any questions. A 1 to 8 reverse split, Anthony? Yeah, so for every 1 share, they gave you 8 shares, but then the price went up 8 times. I mean, I'm sorry. They took away 8 shares and gave you 1 share. That's what I meant to say. If you had 8 shares, now you have 1 share, but the price is 8 times higher, which means if you took a big loss, it's going to be really hard to grow your account back up. You know, that happened to me with Citibank back in 2008 during the financial mess, the mortgage crisis. I had a little 100-share position of Citibank, and the next thing you know, I have 10 shares, and the price went up 10 times. And it took a long time to finally get positive on that because I only had 10 shares. And just out of principle, I just didn't buy anymore. And you know what? I still have those 10 shares, and now it's 11 shares. Thank God for dividend reinvestments. And I'm actually up 300. Oh, I'm up $34 in profit. 34 total profit. I finally made my money back and made 34 bucks. I was up, you know, $300 or $400 until the COVID thing. But imagine, here we are 12 years later, and I made 30 bucks on my investment. Go team. Everyone should run out and buy Citibank. Not as bad. There's probably a few things in here I don't need, but I don't know about the 610 tick. I mean, the last time we looked at it was back in the K. I'm going to get rid of it. I can always go back to it. I've been seeing John Huckle since K, so it's his plan. If you're not here, I'm deleting your chart. All right, that cleans it up some. Still too much, but that's better than it was. Thank you for sharing these moments. All right, guys, I'm going to wrap this up. Any questions, anything before we say goodbye? Anything I can do to help you guys? I don't know. I'm a little bit fuzzy on just the trade room now. I'm not exactly sure what to do with it, what direction to go with it. I don't want to talk just to hear myself talk. Seems like that's all I do these days. At least if some of you are being helped, that's all I care about. I don't like getting up early. I don't know. I might redefine the room. I just haven't figured out how yet. I do want to keep it open. I do want to keep you guys, interested in something that benefits you. I'm just not quite clear what that should be at this point. So I'm open for feedback. Just don't make me work harder than I already am. Only so many hours in the day. Which one of you wants to jump in here and host the trade room once in a while as a guest appearance? That's how John got his 2 days. Now I never let him go. John's stuck. I promise I won't make you stuck. Anyone want to try? Take the microphone and give it a whirl? Roger, you've been in here since the Stone Ages. Maybe you want to give it a go. Anthony? Some of you old fossils? Miles? I see you, Miles. I know how long you've been here, Miles. Pam? Hey, Pam. We need a woman's voice on the mic. You can do it. Yeah, there she is. Pam, we need a female trade room host, at least once in a while. You keep learning from me? Is it me or is it the parrot? I know. Speaking to a crowd is scarier than walking the plank. Polly is so good. Polly needs a cracker, Roger. All right, everyone. Yeah, everyone gives back with their comments and with their interaction. And yes, I jest with the trade room host stuff, but I have been doing this a long time, you guys. Like a long time. All right, everyone. I hope to see you again. Oh, important announcement. This week I have to go into the studio and get really hoarse. In other words, I'm going to lose my voice. I have to read my book out loud in a microphone, all 3,000 pages of it. Seems like 3,000 pages because I haven't started yet. Trade rooms are forever. Yeah. That's right. The recordings will be up there for as long as you need them. No, I won't be here this week, guys. I will not be here Wednesday. John's going to take over. Again, John's a treasure. He's a living treasure. Everyone should send him Amazon gift cards. I can't be here because I'll be in the studio reading my book out loud for those that can't read or don't want to read and want to play it on their phones when they're driving and stuck in traffic. So that's what I'm going to be doing this week. So I apologize. Hopefully I'll be finished by the end of the week. I'm not looking forward to it, actually. Although I am. Yes, I am. No, I'm not. So I won't see you till next week. Everyone have a wonderful week. I hope you make lots of money and discoveries and grow your account and use your SIM account properly and get your 25 in a row and progress positively at whatever level you're at. That should be everyone's goal this week. All right? Have a great day, great week. See you Monday. Bye.